Hello and welcome to my sentiment analysis for the week of June 7th. Last week pretty much went the way I expected, except for Friday. I expected the market to go with a slow downturn, not as aggressive as the week previous, but still trailing downward to some degree. So Monday through Thursday did just that, as we could see with the red candle on the screen that I've just highlighted. This is, of course, this current month, and it clearly shows the significant down push. I really wasn't expecting it to be as significant as it turned out to be, but we clearly see the market pushing downward where the artificial top of the pricing followed exactly what we discussed in the order book last week, where the buys and sells clearly showed less pressure. We see this week, however, the buy side does have more pressure, so I would expect that the price would at least go up to some level within the range that I've marked on the screen. The 1.18 to 1.19 range. That's a possibility, but there's really no way to know for sure until it happens, because we see on the chart some questionability within the buy side order book that clearly shows more pressure at a lower price. So it's very possible that this trend will continue, that the market will keep going lower. So let's go to the weekly time frame. Currently this is the monthly. So the weekly time frame, and we see how last week we had that bit of an uptick that we talked about. Excuse me, the week before last. Last week we had the absolute brutal downtick. So the week before last we had a green candle. It wasn't a big push, but it did overshadow the previous week. Last week's candle was a brutal reset that covered a lot of price territory. But let's go down to the daily, because the weekly doesn't tell the whole truth of the picture. There's a lot going on here. Looking at the daily, we can see a lot of stuff happening. These little marks that I just highlighted, those are Saturday and Sunday, where the markets were closed. So we see basically yesterday this huge mammoth hard push down. This candle is a brutal reset of the entire week. Though Monday and Wednesday were also pretty brutal, Friday, yesterday, was absolute bear domination. Whatever the market had gained for profitability was completely decimated yesterday. And we can see by looking back in the history. Week 1, week 2, week 3. How far back do we go here? We go back 1, 2, 3, 4, 5, 6, 7, 8 weeks of price retracement. Now, the biggest bulk of that retracement happened a couple of weeks ago. But yesterday, in a single day, was a landslide direction for the market. So as we proceed to look at what the market is doing, we can see the order book in the background, and we can see exactly what the buyers and sellers are seeing. So let's get into the details on the daily chart for the buyers and sellers. I'm going to zoom this in so we can get a real good picture with Friday's candle and where the order book really sits. There is very, very little activity on the buy side of the order book above the current price. Even the sell side looks rather thin at this point in terms of the retracement of the market to last Friday's high level. But the story really is below the price. The story is down here. The buys and sells below the current price are quite active. I say that though with a bit of a cautionary in that when we look at the sells above the price, we actually see quite a bit of orders there as well. So there could be short sellers below the price. There could be short sellers above the price. We can't tell. But what we do see is an unusual split. When we see the buy side of the order book, we have a very visible amount of weight within the price below, or within the order book below the current price versus the order book above the current price. Almost all of the liquidity is significantly below the current price. So let's go back up to the higher time frames and really look at the market. Okay, looking at the range we've been tracking, the yellow line being the highest high of the range, the blue line being the current support level of this range. We still have more downward pressure to go before we are at that support line. And the order book does show a very strong possibility that that might very well be the case, that the buyers are trying to push down to where that blue line is, the support level of this current market trend. But let's really get into the nitty-gritty numbers, much like I did a couple of weeks ago where I talked about the holding pattern of my cells. That actually is a very interesting combination of numbers. Okay, looking at last week's profits, really the first week of June, we can clearly see not a whole lot of profit, $1.41. It is what you would expect for this type of strategy. But when you look at the overall metric, it is still on par with what this strategy should produce. But now let's get into the part that really matters. Looking at the duration of time for holding. This is where the rubber meets the road. We can see for the most part above the orange line the pricing I discussed last week. But below the orange line, the activity of last week, selling a couple of orders that were 58 days old and 59 days old. This is old inventory being sold off at a profit, and that is quite significant for the duration, almost 2 months of holding, which fits what I just demonstrated on the chart in terms of the price retracement structure. So by actually looking at what we are doing, what we are seeing in the chart, we can see that very hard push downward even in the actual transactions. And that is a significant point that we simply cannot ignore. Because in looking at the distance between the 41-day period and the 58-day period, the number of transactions in terms of their holding period can help us gauge the slope of the downward trend. It suggests that this downward trend is going to continue, and it's not going to be as gradual as what we might think. Having it drop 1 or 2 days is reasonably gradual, but having a 6-day holding period being sold off is a reasonable enough push downward that we are actually seeing some of the previous week's selling points as I am demonstrating on the chart. So we can see that we're not as mild as I thought we would be, but we are definitely more aggressive in terms of a downward trend. I actually thought we were going to be more of a gentler slope, maybe a reversal. but the actual selling data really does say just the opposite, that this downward push isn't really slowing down yet. There's no signs of exhaustion within the market. That really is what I think is going to happen next week. I think the pattern we see over the last couple of weeks is going to continue quite consistently in relation to exactly how much distance the market is going to drop. I think I'm going to see older positions being sold off next week as I have the last 2 weeks. I don't think we're going to see a very aggressive push as we have in the previous weeks, but I do think that push will be there, and I do think either the combination of euro and USD are losing value, or just the euro is losing value, but there is a clear sign that that market relationship with the euro is growing weaker. Share your thoughts. Let me know how you've been doing over the last week. How accurate has your trading been compared to what I'm seeing in my trading? I think it's important that we keep track of this kind of information, because if there is going to be an upset throughout the summer months, which are normally very good for profit, but if it's going to turn into a bear market, then it is something to be aware of when the actual consumer season does start in September. That could be a bigger foretelling of what to expect within the economy over the winter months. At any rate, worst case scenario, plan for the worst, think about the worst, prepare for the worst, and hope for the best. That's all we really can do at this point, because so much of the market seems so unstable lately. Thank you for watching.